Stocks awaiting stimulus in Brexit progress. U.S. stock indexes finished higher on Tuesday, notching fresh all-time highs as investor optimism surrounding vaccination re-emerged. Besides, market players cheered further progress towards fiscal stimulus measures in the United States as U.S. Treasury Secretary Steven Mnuchin presented a $916 billion bill to House Speaker Nancy Pelosi. As a result, the S&P 500 picked up 0.28%, the Dow gained 0.35%, and the tech-heavy Nasdaq added 0.5%, marking its fourth straight record high. Asian stock markets were higher as well, buoyed by vaccination news as well as solid economic data. In Japan, preliminary machine tool orders for November rose by 8% versus a decline of 6% year-on-year and the previous month, while Australia's December Westpac Consumer Sentiment Index came in at 112.0 versus 107.7 in November. Meanwhile, China reported its consumer price index slipping 0.5% in November versus a year earlier, its first slip into deflation since 2009. As a result, Tokyo's Nikkei 225 index gained 1.33%, while the Hang Seng in Hong Kong added 0.69%. In South Korea, the Kospi jumped 2.02%, while the Shanghai Composite Index in China finished 1.12 lower, pressured by inflation data. European stocks traded mostly higher on Wednesday, with investor attention focused on the Strait of Brexit talks this week. There were some encouraging comments from Irish Deputy Prime Minister Leo Varadkar, who said he believes both sides have more to gain than to lose from a deal. Hungary and Poland voiced optimism that a deal to unblock the European Union's budget and stimulus plan is well within reach. On the data front, German exports increased by 0.8% month-on-month in October from 2.3% in September, while on the year, exports were still down by almost 7%. Imports increased by 0.3% from negative 0.1%. As a result, the seasonally adjusted trade surplus narrowed to 19.4 billion euros in October. As a result, the Stoxx Europe 600 rose 0.32%, the German DAX 30 rose 0.47%, while the FTSE 100 added 0.08%, while the French CAC 40 shed 0.25%. Regional equities paired some gains after U.S. Senate Majority Leader Mitch McConnell said Democrats poured cold water on his offer to set aside some issues in an aid bill. Meanwhile, U.S. stock markets closed lower overnight as losses in technology companies outweighed gains in industrial, energy, and material stocks. The S&P 500 index fell 0.8%. The benchmark index climbed to record highs 4 times in the past 2 weeks. The Dow Jones Industrial Average lost 0.35%, and the tech-heavy Nasdaq fell 1.94%. After days of trying to reach a relief deal, U.S. lawmakers had not resolved a range of issues preventing an agreement. On the data front, the number of job openings in the U.S. edged down slightly in the first week in December. There were an average of 10.7 million job openings posted each day on online job sites across the U.S. this month, down slightly from November's 10.9 million. In currencies, the dollar was mixed on Wednesday against major counterparts. The euro-US dollar gave up early gains and dipped below the 1.2100 figure, having extended its correction from long-term highs. Meanwhile, the pound sterling US dollar bounced above 1.3400 amid lingering Brexit hopes. However, profit-taking took the pair back to below the handle early on Thursday, with the pound flirting with the ascending 20 DMA that represents the key short-term support. Crude oil prices remain buoyed despite a larger-than-expected build in crude oil inventories. The Energy Information Administration reported a massive crude inventory build of 15.189 million barrels for the week to December 4th, after a modest draw of 700,000 barrels estimated for the previous week. Brent crude plunged in the knee-jerk reaction but manages to finish marginally higher on Wednesday, just below the $49 figure, as vaccine and stimulus hopes continue to underpin commodities. On Thursday, Asian equities eased from record highs as stalled U.S. stimulus talks and a sell-off in tech stocks weighed, while British and EU leaders meanwhile gave themselves until the end of the weekend to seal a new trade pact. MSCI's broadest index of Asia-Pacific shares outside Japan eased 0.34%. Now investors are looking ahead to a European Union Central Bank monetary policy meeting due later today. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.